us to absorb everything that Dr. D teaches us, be with us as we navigate through our homework assignments and our exams and whatever projects may come our way. Help us to end strong with renewed energy. Be with Dr. D as he teaches us tonight. Be with our families at home. Thank you for all of your help for this program. In Jesus' name.
Amen. Thank you. I appreciate that very much. Well, first word of acknowledgement and encouragement. Just a super job on your final exam. I think I had probably the highest number of A's recorded in this class, with the highest point value ever given to any student, and no guess who that is. And so well done on that. And, it's quite stunning, and so very well done. Very proud of your entire class. So good job on that. It's a very difficult course, managerial econ in general, and to be able to come through it the way this class did, stunning. Good stuff. This is your capstone course for all intents and purposes. It's going to be a class where you're going to take the principles, theories, constructs, and ideas that fortunately, or maybe unfortunately, depending on how you look at your academic experience, you've inculcated, and put it in your tool bag and bring it through and out in your presentation. At minimum, I would be looking for theories that have been internalized or you've understood in the classes that you've been in with me that I'll be looking for in your presentation. That would include your introduction to management or behavior, your managerial econ in the class here tonight. But any of the classes, managerial finance, business law, doesn't matter what it is, all of them are up for grabs. And any of those classes wherein you pull some of the theories discussed in those courses, I will notice. And I think you'll take notice, and point value will be added to you for that. So this is somewhat of a capstone. This is a course that's going to capture a lot of those things. I'll be talking a lot about that as we navigate this evening. This is also a team project, and so we're going to have either 5 teams of 4 or 4 teams of 5. I haven't decided how we're going to do that. If there's 20 people in your class, close to that, 2021. I'm going to leave the responsibility of you all to determine who is going to be in your team. If you recall from the time you had with me in the introduction to management or behavior, where you built the matrix, or at least you looked at what it was like to build team. This would be an opportunity for you to capitalize on people in your class that have some abilities, and that will be helpful. So just keep that in mind as you go through the random process, and not random, the specific process, and asking people to be part of the team. You also are going to be asked to go into the community and find businesses that were in business in this community who will let you do a consultation project with them. That's not easy, because most businesses do not want to open up their books. Indeed. They want to keep that proprietary. And I will tell you right now, if that's something that they want to do, they can always change the name so that the presentation is given with a whole different name, and only people who really know the numbers will be those of us in this classroom. Or those business owners can talk to me, and I can give them a peace of mind why you students should be able to visually take a look at their balance sheets, income statements, and all the other kinds of things to do a capstone class project. If you can't find a business, you'll have an opportunity to use an S&P 500 or any business for that matter to do this consultation project with. My preference would be to find a small business. It used to be many years ago that I had a requirement for the size of the business. I don't anymore, so it can be a startup. It can be somebody who's done a business 3 months ago, a month ago. The revenue doesn't bother me in terms of size. Any business, any legitimately foreign business is up for grabs. And so tonight, what I would hope you're thinking about quickly is if you have 1 or 2 or 3 people that you know who run a business, where somebody in your group this week, or people in your group this week, and secure the opportunity to do a consultation project with them. That's going to be principally the task at hand. I'll tell you that if you wait for 2 weeks, if you don't secure a business until week number 2, it really becomes problematic. And then if you try tried to do it every 3, you were in trouble. So I'm going to emphasize the importance of getting on the phone, getting in your group, figuring out and getting on the phone, or visiting people who own businesses to see whether they would be open to letting you consult them. What will you consult them? You're going to talk to them about how to improve either their top line, you're going to maximize whatever issue may be in their business that they're usually wanting to maximize, which is profit and or revenue, or minimize some kind of a cost. You're going to consult them to help them get at being more profitable. So with that door opening and then with a questionnaire I have published on Moodle that allows you to get your foot in the door with business owners to ask them questions, you should be all over that as best as you can this week. Question?
Does it have to be in writing?
It does not.
Okay.
It does not. My preference is to have people in this sector so that the owners or principals can sit in the back of the room and be here when you make your presentation. Yeah. So they will be here when the presentation is made.
So what if you have a business owner that you know of, but I don't know if they'll be available?
That's okay. If they're not available, that's fine, but that's sometimes what my preference is.
Okay.
That we can invite them. It's fun to have them here. You'll have an opportunity to meet business people in the community, and they enjoy very much the presentation.
Cool.
Okay. So I'll be unpacking a lot of that during the weeks that follow. This course is very intensive with outside work. Doing surveys, for example. A lot of outside work stuff. And there's a bit of an expense associated with this. I'm going to bring in some displays that have been examples of previous classes that would be sort of a minimum standard when we're talking about making a presentation with point of sales or point of display type stuff. The binder that I'm going to ask you to produce isn't something that you're going to do at home, but it's something you're going to professionally produce. It's a little bit of expense associated with it. You split that up with your team, it becomes marginal. So we'll talk more about that. I will be bringing in a bunch of examples from previous classes. So they'll be sitting up here during your course. We'll have an opportunity to take a look at them, and I'll tell you which ones have been really good, which ones have been so-so. So you have an opportunity to aspire towards the ones that have done really well. Okay, so that's what this class is about. It's, for all intents and purposes, a capstone. It's taking your classes and bringing them together and benefiting business people in this community or communities at large. All right? In other words, you are going to be consultants. You are going to develop a fictitious name for your team. You're going to come up with a consultation name. Again, I'll talk more about this later. You are going to be consultants, and so when you approach these business people, you're not only students, but you are consultants. You're going to dive into the numbers. You're going to dive into their operation. You're going to dive into the business. You're going to interview their people. You're going to interview their customers. You are going to come out of this ready to present with them what you've discovered is what might be an issue, and make a presentation to help them succeed in this community, the community at large. Okay? So again, if you can't find a business this week, then your team should be thinking about Plan B. Plan B would be any business, S&P 500 and larger, not S&P 100, but S&P 500 and larger. Okay, I've denoted that in the syllabus and on Moodle. Any questions? Any questions so far? Okay. All right, so let's take a look at the expectation for the grades in this class. And you'll notice it's significantly different from our last class. A couple things I want to point out in this that I think will be important to you, and that is there is an individual presentation point value here. Both the individual presentation and the group presentation will be graded by you. So you will have assessment sheets that you will use, sort of a matrix that you will use, or maybe better a rubric that will get at what your interpretation was, both in terms of the group presentation and the individual presentation. Okay, so you're going to help me assess grades by assessing how well groups did in their presentation and the individual people did in the presentation. Yes?
So is it just pretty much the same presentation, just how you did on own
That's right. Yeah, so think of it this way, if you've got 25 minutes to make your presentations with a 5-minute Q&A, and you've got 5 people, you're really talking about 5 minutes per person. That 5 minutes will add up to the quotient equal to 150 points. Right? Kind of thing. Some groups are seamless in splitting up the presentation among 5 people, for example, 2 or 3 times. Depends upon how complicated you want to get, how risky you want to get in your presentation. You can imagine you can trip over each other trying to do that, right? So 300 points then are going to be calculated based on presentation. So I'll talk a little bit about that. You'll learn from me that I'm not interested in you relying on notes. And to the contrary, I want you to get to know the business so well that you are standing up here as if you own the business. You're going to be thinking in terms of making a presentation to the shareholders of the business, but here it's going to be to the owner. And you're going to give face to the owner by telling him or her or them that you've worked hard at getting and consulting with their business, and the last thing they want to see you doing is reading notes. And honestly, the last thing I want to see you doing is the same thing. Practice, practice, and practice. This room will be available, or the next room, depending upon which one I decide to land in, subject to the audiovisual. And you'll have an opportunity to secure with the university to secure them, largely through Andrew's office, our assistant dean, the use of the room to practice in. And I would encourage you to do that, and I'll talk more about why I think that's important as we progress together. We will be building the framework of your presentation upon a concept called the balanced scorecard. It's a tool I hope that you all will use in industry and take with you from the university and use it regardless of where you're at. Of the constructs that are built into your book, probably the very best one is the balanced scorecard, and it's the least amount of material built into that book, unfortunately. But we're going to borrow from it, and we're going to build our presentation based on the balanced scorecard. Built by a couple of chaps out of Harvard University a couple of decades ago. It's a great vehicle for building consultation presentations. You'll have some homework here. The homework that will be assigned is fairly simple. My objective during the evenings is to go through examples of that homework, so it's very easy for you. Why? I don't want you spending a lot of time doing homework. I'd rather have you spending time going out and surveying, talking to people, and getting a feel for the business. But we have a learning outcome you have to get at. The learning outcome you have to get at is reflected in the homework. That homework has to be done on your own, and handed in on a week-by-week basis. On your own and handed in on a week-by-week basis, not uploaded, but hard copy. It doesn't have to be done on a computer. It can be done on written out, and with some degree of demonstration that you understand the material that we're talking about. And that point value then will be added in to your individual point value as we calculate your grade. And then the handbook itself. There are elements of the handbook that are going to be important. I'm going to get one, and your business owner is going to get one. You're going to produce 2 of them. And I'll show you what those handbooks look like, again, as the weeks move on. But I expect those to look nice. I expect tabs, minimally tabs in those handbooks. Nice cover, nice font, and the right kind of pound usage of paper. Something that's going to be somewhat heavy, something that's very professional. And so I'll talk about the handbook, but I'm putting a lot of points on that handbook. I'll tell you the truth right now, that point value is very easy to get at if you will just spend some time making that thing look professional. That's it. Other than the fact that the substance of the handbook will include your findings, but just make it look professional. Goes a long ways in that. So this is a class all of you are likely to do very well at and finish the 5 marks. Do you follow me on this? I'm not kidding with you on that. You're likely to do a very good job and finish with 5 marks. The variable that I will be looking at that will drive that conclusion is how hard you work on your presentation. Okay? You can not know your business, your issue very well, but do a very good job in your presentation because you practice. questions on that? Any questions on this? Okay. So unlike the last class where you fretted to no end on passing, and paradoxically did as well, if not better than any class I've taught, I think my last class earned more extra credit per capita student than any class ever done.
Well done, guys.
Like, dang. It's like extra credit heaven. It's unbelievable, man. So, but it was good because it obviously helped a lot of you. This class, there will be no need for extra credit. To the contrary, this class is all about bearing down, finishing strong, and doing a great consultation project, so you can finish well in the program, knowing that you're taking a lot of the stuff you learned and applying it to benefiting and blessing the community at large. So we have done this for since 2004, and we've probably had several hundred businesses we've consulted, and it's just been a great blessing, written up in a lot of periodicals. Just it's really quite cool. So you have an opportunity to, do something really cool, and I hope your people will do that. Okay. All right. Now, there is no way on earth that you can even get into the door and talk intelligently with business people unless you know very well two things. That is an income statement and a balance sheet. Okay. There are two things that you have to be very good at, and that is an income statement and a balance sheet. Now, so for some of you who have taken an accounting course, that's going to be like, hallelujah, I got that nailed. And if you do, then I would invite you to thinking about inviting them into your group. But you have to have some competency at understanding both of those. You've got to have some competency. You can't expect to ask a business owner to hand them their financials and you look at them with deer in headlight look. You can't. To the contrary, you should be able to look at them and have a general semblance of knowledge of what's going on in those financials, so that it doesn't cause you to go into dissonance. You have to have some competency with both of those. Okay. Who has had accounting classes? Well, there you go. Look around, boys and girls. So those will be helpful. So fortunately, I gave you a little bit of an introduction, and you had some of this with your finance class. During our last class, looking at an income statement. And so we're going to begin our discussion tonight talking about the elements of an income statement, and then the balance sheet equation, or what we call the accounting equation, and talk about how we use the accounting equation to get at balancing a balance sheet. To do that, every week when we come in, one of the first things I'm going to shine on this white screen is a chart of accounts. And then you're going to want to take the chart of accounts and construct an income statement and a balance sheet. There'll be numbers assigned to a general account, and your job is to pull from those, from that general account, the numbers that go into the respective column, whether they're the balance sheet or the income statement. So we'll have a little bit of work we're going to do in each class for the next 4 weeks. But your job will be to be very comfortable with the balance sheet and the income statement when you're done with it. It won't be tested on, so don't worry about that. To the contrary, it's designed for you to get some competency at understanding that. Does that make sense? Right. So we're going to begin then our discussion tonight by going into this whole idea of an income statement and balance sheet. And to do that, I'm going to shine up here a chart of accounts. And we're going to work off of this to get at that. This second bake of lights turned on. Okay. So we begin our discussion with the elements of an income statement. The elements of an income statement, and that's going to be something that will be work for you to grasp. We refer to the top line in business, as our revenue line. as our revenue line. So we call that our top line. We hear people talk in terms of what's your top line. They're talking about revenue in business. So right at the very top of our income statement, define our income statement as an IS income statement. The very top line is revenue. However, it takes inputs, it takes stuff to produce revenue. It takes materials and supplies to produce revenue, and to do that from an accounting perspective and to account for those things, we call that cost of goods sold. Cost of goods or services sold. This can be services as well. And we subtract our cost of goods sold from our revenue to get what we call our gross profit or gross margin. These will be terms here that you'll hear very often in the world of business. A lot of you will confuse gross margin with profit margin, and you shouldn't, because gross margin and profit margin are very different. They are not the same. We'll come to gross profit margin a little bit later. But you have to have competency when you're looking at an income statement to know that these cost of goods sold at minimum are subtracted from your revenue to get what we call gross profit or gross margin. Last semester or last class, I defined this next group here as explicit costs. We call those operating expenses in this class. Known as explicit costs in the previous class or in an economics class. When we subtract our operating expenses from our gross profit, gross margin, we get what we call operating income. And ordinarily this is denoted as earnings, earnings before interest and taxes, EBIT, earnings before interest and taxes. And I'll talk about why business owners like income statements showing operating income, wherein they do not have the interest expense up here and they do not have the tax expense up there. Instead, they have the interest expense down here before they get to their bottom line. There is a business reason for doing that. You as students should know that that is very typical with businesses wherein their operating income does not include their interest expense or their tax expense. You would think it would be built into the expenses up here, but business people like to have it built in underneath operating income. And then when they back out their tax expense and they back out their interest expense, sometimes they even put their depreciation expense down there, we get what we call net income, or what we want to call profit. Net income, bottom line.
What is the one below the tax?
So tax and interest expense. Interest expense, tax expense. INT. Interest expense and tax expense. And it gets us the net income. So that is, what you see there is a very typical income statement. The capacity I want you to get at quickly is these terms here. You should know those terms when you're talking to a business owner, and they will know if you don't know them. And if you don't know them, if you don't get at them, if you don't understand those, you're going to be behind the 8 ball very, very fast. Very, very fast. Again, revenue, minus cost of goods sold or cost of services sold, depending upon if you're a service industry business or you are a manufacturing type business. That could include producing t-shirts, for example, silkscreen, for example. Equals gross profit, gross margin, minus your operating expenses equals operating income, or earnings before interest and taxes, debit or debit, depending upon your East or West Coast pronunciation of that. We take out our tax expense or interest expense and we get down to what we call net income. Now sometimes we will have the interest expense and we will have the tax expense up here. When that happens, this goes away and that becomes that. And I'll talk about that some other time. This might be an example. This chart of accounts tonight, I don't remember. It might be an example of fact gap. We don't have interest and tax, maybe we do. Yeah, we have an interest expense there, so that won't be an expense. But that's typically what happens. When business owners put their interest expense or their tax expense here, operating income goes away and net income comes into play there. And I'll help you with this when you get your accounting from your business people. I'm not gonna hold you, I'm not gonna leave you in limbo. You bring them on in, I'm gonna sit down, I'm gonna spend a lot of time with your groups to get at understanding this, so we're very, very crystal clear on that. This is what we call the income statement. The balance sheet, to the contrary, is an accounting equation wherein we say assets equals liabilities plus shareholders' equity. Assets equals liabilities plus shareholders' equity. That's the balance sheet. We'll call this the BS. No funniness on that. Balance sheet, BS. Okay. Balance sheet. Assets equals liabilities plus shareholders' equity. What do we mean by that? What we mean by that is that if we have $100,000 in assets, we better have on this other side something that might look $50,000 of liabilities and $50,000 of shareholders' equity. In other words, 100,000 equals 100,000. Well, that's what we call the balance sheet. The left side matches up with the right side. Now, don't go into dissonance trying to look at this and say, what the heck? That's not possible. Got liabilities there. How can that even be possible? Don't worry about that right now. What you need to be worried about, to the contrary, is to be able to get at a place where you can balance chart of accounts so that the left side is equal to the right side. These are two statements that you're going to have to have some degree of competency in. We do the statement of cash flows, but we're going to eliminate that in this class tonight. The statement of cash flows is usually the statement that we get it for valuation. Everybody watch Shark Tank? Shark Tank, you'll hear them argue 5 times valuation, 6 times valuation, free cash flow valuation. Now, we're not going to get to the free cash flow in this class, but instead we're just going to get at both of these and have another class you can worry about free cash flow. Since I talked about value of business in the last class, we won't deal with that in this class. Okay, so with this in mind, here's what I want you to do. I want you to grapple with this for the next 15 minutes by taking these numbers, and both these numbers represent things that go on the left side and things that go on the right side, to pull from these chart of account, this chart of account you see up, or accounts that you see up here, and try to figure out what goes in revenue. And I'm going to help you with the revenue right now, so make sure you don't screw up the revenue. When you look at the list here, and you see this word cash, and you see, let's see, net sales on the one hand, and cash on the other. Which of these two looks like, listen to me, which of these two, net sales or cash, looks like an asset to you? Doesn't it to you? Does it look like revenue? Could have come from revenue, but it's clearly money we have in the bank that we're booking as an asset because we can liquidate it and pay debt with, can't we? Therefore, the cash belongs over here. Would you agree with that? What does what does sales look like to you? What does it sound like to you? Revenue. Does that make sense? So there we go. We can begin to construct our balance sheet knowing what our number is on the left side here and what our number is on the top here, and see if you can figure out how to navigate all the way down to figure this out. All right, we'll come back and we'll play with it.